Okay, can everybody see the screen with the presentation?
Yeah, we got you.
All right, great. Hopefully that's large enough. So good afternoon, happy St. Patrick's Day, everybody. I'm going to go over some non-QM loan product information today. I want to thank everybody for getting together, give us a little bit of your time. Great organization, Keller Williams. We're happy and would be happy to partnership with you guys. We know that you also have an in-house Keller mortgage. Perfectly good with that. We operate behind a lot of other large national companies with similar setups and operate very well in that space. We do a lot of loans that a lot of mortgage companies cannot do, particularly in-house. Oh, I'm getting a flag. What happened?
Just give us a minute. We're still eating our food.
Okay.
Okay, thank you.
Let me know when to.
We're almost ready.
Let me know when to jump back in.
Desiree, you want to take over?
No.
Oh.
Yeah, this is one presentation.
Whoa, yeah. Okay, good.
Okay, everybody back and ready? Okay. All right, thanks again for joining, everybody. Whoop. Give me the thumbs up when you're ready to roll.
As Barney Fife would say, nip it, nip it, nip it. Okay. We are going to go ahead and get started. We have a presenter online. I'm going to start with presentation here. Okay, if you want to go ahead and start your slideshow, we'll go ahead and get started.
Sounds good. We'll do. Thanks again, everybody. Happy St. Patrick's Day. And thanks for getting us together to share some non-QM information with you. Hopefully you'll find it all beneficial. Please feel free to stop me along the way. Otherwise, I'm going to go through some of the programs. There's quite a few of them. I'm going to highlight just a few, but give you a little bit of information on all of them. A little bit of background on non-QM, a little bit of background on the company. And like I said, feel free to please stop me and ask any questions along the way. Otherwise, take some questions at the end. Hopefully you'll all learn a little bit about non-QM and find some more customers that you can assist as a result. So we'll just dive right in here. I'm going to give a little bit of background on, just for folks who may not be familiar with non-QM. What is non-QM? And basically, non-QM is any loan that doesn't meet the QM or agency guidelines. So it's not going to fit conventional, Fannie, Freddie, VA, USDA, FHA. It falls outside of those lending requirements. Typically, debt ratio, loan size, along with some other various rules, but those are usually the two primary reasons that it goes into the non-QM space. Why non-QM? Well, as you can see here recently, with all the turmoil in the market, the products that are coming our way into the non-QM space are being pushed over from the agencies as they continue to dwindle down their portfolios. They've all decided to push some loans out and no longer purchase. So investment loans are becoming more and more difficult to get approved on the Fannie side and Freddie side. Debt ratios, again, self-employed borrowers particularly are difficult. There's also talk of a lot more constraints coming down the road, such as cash out. So any cash out refinance down the road and debt ratios above 45, all are going to be more and more difficult, if possible at all, to keep into the conforming side. So not only is non-QM the most rapidly growing space in the market right now, it's going to continue to be for, looks like, for years to come. So if you haven't been involved in it, you want to partner yourselves up with someone who's been doing it for a long time, doing it in-house, whether that's us or somebody else. We've been in this business of non-QM space here at NP Inc. for a couple of years. We do about $80 to $100 million a month in it. We expect to double that by the end of this year. And the company's been in business about 25 years. I've been in this business about 30 years, predominantly on the non-QM or subprime space. So we put a host of professionals together here that have been doing this all of our careers, and it's something that we really enjoy. So again, hopefully we can impart some of that knowledge on you today. So let's dive in. Here's some of the niches that we can offer. With the non-QM products, up to 95% purchase to $1.5 million loan size, 90% loan to value on a bank statement program, up to $2.5 million. We can do warrantable condos as well as non-warrantable condos, ITIN borrowers, cash out up to 85%. Same thing with debt consolidation. We can also do a DSCR, and that's one of the programs that I want to spend some time on today specifically, that's a debt service coverage ratio loan, where the only thing we look at is the subject property. So it doesn't matter how many properties they own, doesn't matter what their other debt ratio or income is, it's only the cash flow and the subject property. And again, we'll touch on that one in a little bit. We do some alternative document loans with bank statements, P&L only. Again, the various investment properties with DSCR. We can use asset utilization. We have 6-month seasoning for cash out. We can also do interest only. So on loans where the debt ratio is real close to qualifying or just missing qualifying, by flipping it to an interest only loan, we're often able to get the debt ratios down and qualify. We also have a 40-year fixed term or 40-year with a 10-year interest only option. Again, really assist the debt ratios in some of those higher loans. And we can offer, the bank statement analysis up front so that we don't have any issues with those loans going through underwriting. But those are the list of niches. With non-QM, there's never mortgage insurance, so no PMI on all these products, all the way up to 95% loan to value. Okay. So what this enables us to do, we can qualify more borrowers, and that's the primary purpose for having this whole product line. We also offer all the conventional Fannie, Freddie, FHA, VA, USDA loans, but this particular space is where we're putting most of our energies at this time. So normal things like 3 credit scores, no minimum trade line, qualify up to 90%, 24-month mortgage history with no other trade lines, all the way up to 90. We're always going to use the primary wage earner score. And income is equal. If you should happen to have 2 borrowers with the same income, we can use the highest of the 2. Married couples, joint borrowers can actually combine their trade lines. So if one person has limited trade lines and the other is deeper, that will qualify also. Our normal trade line requirements are 2 for 24 months or 3 for 12 months. If you're limited beyond that, we still have an option in our expanded credit program. On bankruptcies, we can do the filing date on the Chapter 13 as opposed to the dismissal date, which picks us up a couple of years. And then we also have programs for people that have been in a bankruptcy, foreclosure, deed in lieu within just 12 months out, which is also very aggressive. So again, the whole design of this product line is to capture a lot of the customers who can no longer qualify for conventional financing, and this gives you a whole host of options. Okay, let's kind of jump into the actual individual product lines. There's a couple of slides here on our various products. I'm just going to cover a couple of bullet points on each one, and then I'm going to stop on 2 or 3 of them that I think are the most important for you guys. Okay. What we have basically is a product line that looks like a waterfall. So you start at the top, and the top product is the Select Prime Plus. That's the most stringent guidelines, has the best pricing, and then we move on from there. So there are some tighter requirements in Prime Plus. You can see the minimum FICO is 680, or if I move across the page, on the Select Prime, it goes to 660. On Prime, it is 620, and then it goes all the way down to 580 at the expanded credit. So you're going to look at your options, see where you are in the FICO score and LTV band, and then what type of income documents are we looking at? Are we doing a full doc loan? Are we doing a bank statement loan? Is it a DSCR loan? And that will help you find the correct product. And of course, you reach out to us anytime you have any questions, and we'll help you along the way. But for any loans that you currently have, or any borrowers looking for properties that they have the cash down payment, or maybe they're a little short on the conventional side, where our requirements would be less stringent on the cash down requirements, or a tighter debt ratio, or you just can't get the income to qualify. They have plenty of assets, very strong credit. Very good chances are we have a product that we can put them into. So we'd be happy to help you with those. Okay, they also all have reserve requirements. Our debt ratio standard is 43% on the Prime Plus, but then it goes to 50% on all the other products. This is an exception type of product line, which is another good thing. It's not the, while there's no DU, it's not the black and white underwriting guidelines of the conforming world. So when things make sense, a little debt ratio exception, possibly loan to value exception, other common exceptions for compensating factors where the customers have strong credit, strong stability, plenty of assets, a good amount of money in reserves, we're able to massage the guidelines a little bit to make sense, make some common sense judgment decisions. So one of the other beauties in the non-conforming space that we're able to do that doesn't exist in the conforming world. All right, and we keep moving through. Okay, the next set is our DSCR product, which I do want to spend a little bit more time on. I can't see the room, but maybe somebody in the front there can just kind of give me a nod or a wink. Or has anyone done a DSCR loan, or is anyone familiar with the DSCR loans?
No.
No, okay, great. So this product is, as I said earlier, it's one of our top products in the non-QM space. It's for investment properties only, not a primary or second home. It must be an investment property. This particular product is a perfect use for ease of transactions. It's for good use when you may run into people who are in an LLC. Perfectly normal. We do probably about a third of our DSCR loans close with an LLC. You've got maybe a group of folks, investment club buying properties, and we can do that. The only thing, again, that we look at is the subject property and the cash flow. So long as the monthly rent covers the mortgage payment, full PITI payment, and any association dues, if applicable, then the loan, along with the credit score and the LTV and a debt service ratio over 1, again, meaning that the monthly rent is at least equal to, if not exceeding, the full principal, interest, taxes, and insurance payment. And that's it. It's as simple as that. If there's an LLC, we add to the documentation the operating agreement so we can see who the members are. Any authorized signer of the LLC would go on the loan, and any non-authorized signer but just a member, they would just sign a personal guarantee. So this particular product allows us to go all the way up to 85% loan to value, so 15% down. And again, no mortgage insurance, ease of transaction. We've got folks that maybe they're self-employed and either don't want to give you the 100 pages of tax returns, or it's just complex. You don't even have to look at any of that. You put all that aside. You get the market analysis that's completed, the 1007 with the appraisal, and then you get us a copy of the current lease. And again, if there's an LLC, the operating agreement, and that's about it in terms of documentation. We get an appraisal, market rent covers the mortgage, and the loan's approved. It's that easy. So great product, very easy to use, all the way up to 85% loan to value. If you have any folks like that, we'd be happy to take a look at them. Al and Loretta can help you while they're on site there today. Otherwise, pick up the phone, give us a call, and we'll walk you through that product. But it's one of our best products, one of the easiest to use, and it's very big. You can also do Airbnb properties, those type of properties, you just get a printout for the last 12 months from Airbnb, and that'll show us the market rent. And again, very popular. You know, you're in the market there along the shorelines where you see those quite a bit, and it's a really good one for this product. Any questions on this specific product?
I have a question. Do you do South
Yes.
Carolina too, or just North Carolina?
Did you have-
We're in most states. We're in about 44, I think it is now, but both of the Carolinas, yes.
What's the LTV?
Loan value is 85.
Any other questions?
Approximately
Okay.
what would the rate be today for that loan, your interest rate?
For that particular loan, depending on the score and LTVs, they're probably in the sixes, maybe even the sevens, but usually mid sixes.
Hey,
We also offer, I'm sorry, was there another question?
no, you're good.
Okay, thank you. So let me jump on to the next one. It's very similar. It's also a DSCR product, but instead of a 1 to 4 unit property, this one actually allows us to go either 5 to 10 on a residential property, or if you have a mixed use property with one storefront or office type location on the bottom floor, and then residential units above that. Operates just the same way. The only difference is a maximum loan to value of 75 instead of 85. But otherwise, all the parameters are the same. It's based on cash flow, no other income documents required, no tax returns. And this again, all the way up to 75% on a 5 to 10 unit residential or 2 to 8 mixed unit property. Right? We also do loans for foreign nationals. So that would be somebody who is a citizen of another country and purchasing either a second home or an investment property here in the United States. But all the way up to 75% on that one with a 680 score or better, all the way up to loans of $3 million. We offer loans for individuals with ITIN numbers who don't have a Social Security number. Those are typically folks who are actually in the country, your DACA, Dreamers. They've been here, they maybe went to school, visa expired, never got one, and they're still here, and the country's fine with it, the government's fine with it, they pay their taxes, we get their documentation like we would normally, pay stubs, tax returns, or bank statements, and we can go up to 90% loan to value with a 660 score for the folks with the ITINs. Again, that's for an owner-occupied property, second home, or an investment property. Okay. Let's talk a little bit about some of the other alternative income options, which is our largest segment of loans that we do in this space. Probably about a third of all the loans that we do are self-employed borrowers who just typically cannot produce enough income through their tax returns to qualify. Because they're self-employed, they write off a lot of their deductions, just like the rest of us do. And that leaves them maybe a little short on their debt ratio, but we can qualify them utilizing their bank statements. We either get 12 or 24 months of their bank statements, use their average deposits, and typically that's enough to qualify them for the loan. Okay. Those particular programs are available on almost all of our product lines. So that's our Select Prime Plus, Select Prime, Expanded, and our ITIN loan products. Yes, sir. Question.
Do manufactured homes?
We actually do not do manufactured homes. We can look at them with the conforming limitations, but we honestly, it's not a particularly strong product line for us. So I'd rather tell you that up front. Okay. After the bank statements, there's some other programs that we can, excuse me, also qualify for. It's 12 or 24 a month when we're in the bank statements. You can use either the business. If you're using the business, you can use 100%. As long as they're a 100% owner. If they happen to be a 50% owner, you would just use half of the deposits. You can also use a CPA prepared P&L. Another option, but again, these would all be options when you don't have enough income through their tax returns, but they have good cash flow. Here's our P&L options, P&L only, P&L with 2 months bank statements. Again, just a number of different ways that we can try and back into sufficient enough income to get them to qualify. If they have good credit and they have assets, chances are we can figure out a way on the income side with all the alternative documentation that we're permitted to use. All right, here's one I wanted to stop and spend a minute on here too. It's a great program, very simple, 1099. Any client that gets paid via 1099, great for realtors, obviously. Again, no tax returns, so you don't have to worry about all the myriad of deductions that come out. The way that we calculate the income on a 1099 customer is simply we take their 1099s for the last 2 years, we multiply it by 90%, so there's a 10% expense factor used there, and then we divide it by 24. So again, get their last 2 years 1099s, multiply that by 90%, divide it by 24, and that's the monthly income that we can use. Typically and substantially higher usually than you would with the net coming off of a tax return off the Schedule C. So a really good program. Anybody who gets paid by 1099, we see a lot of realtors in there, truck drivers, a lot of service folks, financial planners, and again, utilizing that 90% income factor is typically a lot higher than you would if you were utilizing Schedule C. So ease of use, very simple, very good program, goes up to 90%, all the way up to loan amounts of $4 million, and down to a score of 580 with a 50% debt ratio. So keep that one in mind. It's definitely an easy one, and one of the ones that we do quite a bit of each month as well. All right, and the last one that I wanted to cover on the alternative income side is another really good one, and there's 2 ways to use this one. It's called asset utilization. So what we will do is if you have a borrower who has substantial assets, but maybe they're retired, they're living on fixed income, the fixed income alone isn't enough to qualify. If they don't have a monthly annuity set up, which is typical in the conforming space where you need to have it set up and you need to have proof of receipt over the multiple years of the exact same amount on the same date, a lot of people just don't set it up that way and they pull it as needed, and that's perfectly fine. So you'd have the option of utilizing just their assets. So let's say they had a $1 million 401k sitting there that they draw on as needed. You would just take that $1 million and we would divide it by 60 months, and that's the monthly income. If they have supplemental income, so they either have Social Security or they have a wage earner job that's just not sufficient enough to qualify on its own, and they have the assets, so you're using both a combined asset utilization and income, then we actually only divide it by 36. So you would take their, let's say they work part-time or they have a full-time job, you take their regular earnings through their pay stubs and W-2s, and then you supplement that with the other income, which is the asset utilization. So it really works great for anybody that has some sizable assets. You can see there at the bottom the qualified assets. If it's in their checking or savings account, you can use 100% of those funds. If it's in stocks, it's 80%. If it's in a retirement account, it's 70%, or 60 if they're not 59.5 years old or older. Again, a really easy, good product to supplement someone who's either doesn't have any income at all, but has the assets, or has income, but just not quite enough to qualify their debt ratio and their income alone. Another really good program. So that's kind of an overview of our non-QM space. There's a ton of products in there. We'd be here for a couple hours if I went over each one. Feel free to look over the PowerPoint presentation. I'll email it out and make sure that everybody has a copy of it, along with our matrices, so you can see what each of the product lines actually look like. Easiest way to do it, though, is pick up the phone when you have one. If you have one now that you're struggling to qualify, they have good credit, or maybe they have the income and their credit's a little dinged up from something in the past, especially with COVID. Perfectly normal in this time and space in the world. So there's just a lot of ways to qualify borrowers outside of that traditional conforming space, and that's what we want to make sure that everybody's aware of. Like I said, we've been doing this for a long time, somewhere between $80 and $100 million a month right now. Again, we expect to double that. Finding partners like yourselves with a great brand, goes a long way, and Al and Loretta are there to help you out. happy to have you join in for a little bit today. Hopefully you've learned a little bit. If there's any questions, I'd be happy to answer a couple. Otherwise, I'll turn your time back over to you and hope everybody enjoys a happy St. Patty's Day.
I have one other question. Do you have any products that provide construction to perm loans?
I'm sorry, did you say construction to permanent?
Yes.
We currently do not. We actually have that in the works, so we'll be happy to announce that when it comes through. One thing that we do offer that's similar, you may see, that kind of rings a bell, is the delayed financing. So what I mean by that is someone who purchases a property with cash, and especially in this market with competing offers and offers over list price, a lot of times people will just come out of pocket, buy the property, make sure they get it, and then they want to refinance for cash out to put their savings back. So while we don't have the construction to perm, currently, we do expect to roll that out later in the year. But again, that delayed financing may be another type of option that you guys can utilize.
Okay, great. Thank you very much. Any other questions?
You're perfectly welcome. Any other questions?
Jody, can we get the deck?
Sorry, say that
Can
again?
we get the deck emailed to us?
Yes, he will.
That's all. Thank you.
Yeah. They were just
Yeah,
asking.
I'll send the PowerPoint back out now, and that way you guys can get it distributed while you're all there. And again, if you have any questions, Al and Loretta will be happy to answer them for you today. If not, feel free to reach out at any time. You're definitely going to come across these borrowers if you don't already have them in your pipeline. And so it's just a matter of keeping that at top of mind and know who to call to help you out. And we'd be happy to do that. So thanks again, everybody. Hope you have a great day.
So we do have a few folks in the room. If any of you have questions you want to ask.
One of them has red hair. She's our branch manager. So if you don't have her card, feel free. I gave you each one of my cards. I live in Orlando. We have a small office here on Market Street down toward downtown. Loretta lives up in Winston-Salem, but she comes down once a month. So if you guys ever want her to come down when she's here, you guys can schedule it and she can pop in for an afternoon. But definitely non-QM space is getting bigger and bigger and bigger and bigger. And when you run into somebody that it rings a bell and you go, uh-oh, this is a non-QM buyer, the last thing you want to do is have this blank look on your face where you can't help them. And they see that. Okay, and one of the benefits, and I will tell you that one of the benefits that makes us a little different from everybody else is that right now, all the calls are driven right to Loretta. God bless her. Okay, we're at Mellow Mushroom Pizza last night eating, and she's trying to eat her pizza, and she got 3 calls and 1 application that dinged her phone. All right, so, but she's going to take all the phone calls. Okay, so you don't have to deal with a loan officer that graduated 5 months ago that goes, well, let me find that out and I'll get back to you. Well, my buyer's right here. Okay, when they're hot, they're hot. Okay, well, the last thing you want to do is say, well, let me get back to you next week. Okay, that's her cell phone. Okay, at 7 o'clock at night, it's going to ring. You have a buyer. Okay, and the buyer's standing there talking to you. Okay, you can say, well, let me call. All right, my branch manager right here. Let me just introduce her to you. Loretta? Loretta? Yeah, okay, let me introduce you to Mr. Jones, okay? He's interested in a property over here on the beach. Hang on for 1 second. Okay, and that's how you do it. And that's how you close business. Okay, that way you have good face, you know what you're doing. You have a connection, because what's one of the worst things that we hear as a realtor? I'm a realtor too in Florida. Okay, what's one of the worst things that we face when we're trying to deal with our lenders?
They can't help you.
They can't help you. They don't get back to you. They don't answer the phone on a Friday night when you've got somebody there, or a Saturday afternoon when your phone rings and you got a possible deal there. They don't answer the phone. Okay, we do. All right. So that's what makes us a little different than everybody else. All right, and that's so Loretta, you got anything?
Yeah, I just wanted to point out really quick, we do have a construction department for primary residence only, but not on the site. So it's conventional and V8 that we can do. And then we also do, we have FHA loans and VA loans that go all the way down to 500 credit score. So that's an option too. That wasn't on there. That's not on the non-QM side, but we do non-traditional and traditional as well on there. And then trying to think, that's pretty much the horizon of all of our programs and stuff. But yeah, there's plenty of options out there. So if you guys have questions, like you said, I'm available 7 days a week. I will answer the phone. If I'm busy, I will send a message right away and then call you guys right back. So midnight, I'm really, I'm up all the time. Yeah, so but there's a lot of capability to get more people qualified there. So I did a truck driver last night, the application that he was talking about. He's been in business 18 months. We're fine with that. Not 2 years, so you can do 18 months. His 1099 was $100,000 for last year. I was able to use $7,500 a month to qualify, which is huge because his taxes show that he made nothing. So just some programs for you guys to look at, and then yeah, reach out to me if you guys have any questions.
I just had a quick question about the IT ILM.
Uh-huh.
Is it standard across the board, like with the percentage, and the, like how long they have to have credit for it?
So, yeah, they're more of a full doc just because they have to have, so their visas expired, they have to have the renewal in there. We do have to have the 2-year tax returns. They are, yeah, pretty, but as Carl did mention, if there's compensating factors, we can ask for an exception with our VPs and them. And typically, if they have them, they'll waive a lot of stuff, like the LCD, for instance, is one of them. But yeah, they got assets and stuff, so.
Okay, because I think the whole thing was, the confusing thing was just with the credit, like they'd like to see like a 12-month credit history, but I mean, they have the income, they have the, multiple years of income and tax returns, but like, do you have to have, is it across the board with the credit or?
No, so that's why we would ask for an exception because non-traditional is in there. So we would just have to see if they have, the verification of rent, if they have the trade lines and stuff like that and go from there, so.
All right, thank you so much, Laura.
Yes,
I really appreciate
Yes,
it.
absolutely.
Happy,
You're welcome.
Sorry for listening
Happy
out,
St.
I
Patrick's Day.
apologize.
That's all right, we got pizza coming if anybody didn't get a sandwich.
Oh, yeah.
All right, Loretta's gonna get her card. So, yeah, thank you so much, everybody.
Yeah, thank you guys.
You're welcome.
Nice.
Thank you for
We're gonna
We'll
talk
hang
about,
out with you.
we're gonna talk about dual agency and okay, really won't pull up offers, right?
Ah, there you go.
Okay, so let's talk about dual agency first. So remember, when you fill out a listing agreement or a buyer agency agreement, that agreement is with the firm, Keller Williams, all right? So if you have a listing, it's with Keller Williams, a buyer comes along with another Keller Williams agent, and they have a buyer agency agreement in place, you are automatically in dual agency, unless you have checked the box that designates designated agency. So I think there's a lot of confusion of how you are to communicate with a buyer or a seller if you're in dual agency, and I think there's a lot of confusion about what designated agency means, right? Would you agree to that?
Yes.
Yeah, okay. So let's take number one. Number one is dual agency. Dual agency means that you can't recommend to your client what to make the offer for, what to accept an offer that comes in from another Keller Williams agent. Okay?
You're Switzerland.
You are a facilitator of the sale. So all you're doing is pushing papers. And they need to understand that when they put their initials on that agreement that says, yeah, I agree to allow you to be a dual agent. Okay. If they don't, that means if you're filling out a listing agreement and they say, I don't want dual agency, then that means no one else at Keller Williams can show that property. So you're almost, you want to encourage them to select one or the other. Most people have an issue having you as the buyer's agent and the seller's agent, right? So that would be a designated agency role. But There's still personal things about the buyer you can't tell the seller, and there are still personal things about the seller you cannot tell the buyer. You have to disclose, no matter what, any material fact. So if you knew that the crawl space had water in it, you need to tell, whether the seller wants you to tell it or not. If you get a call, if you have a buyer and the buyer walked away from that deal, and you get a call from another agent that says, hey, I see you had a buyer on this property and they walked away. Can you tell me if there were inspection issues? You're bound to tell them because it's material fact. Okay, so a designated agent acts like they work for a different firm. So if you have Carly, thank you, that's my dog, and you think I can say it 10 times a day. Carly is the listing agent and Stephanie is the buyer's agent. Okay, and they have agreed they're going to act as designated agents. They're gonna act like they work for different firms. You cannot have, so you can give your client suggestions on whether to take an offer or not, how to proceed. You can suggest to your buyer what they should go in at with an offer, how much due diligence, how much, whatever. You can give them that advice, but you will not share any personal information that you know about individuals. Okay. That's usually how people want it. But if you are on the same team, you can't be designated agents. You have to be a dual agent, or you can refer it out to someone else. Now, have I totally confused you?
No, so the work of real estate agents, have sellers agent, or.
Select them all. The working with real estate agents just says, I could act in any of these roles. The buyer agency agreement or the listing agreement is what dictates what role you will act in. Okay, on the listing agent and the buyer agency agreement, you will check dual agency or designated agency, not both. Okay, so it's either or. Good question.
I have a question.
Yes.
What if, let's say I'm the listing agent, Keller Williams Wilmington, somebody from Newburgh, is that still dual?
They're not our firm.
Gotcha.
Now, if it's someone in Brunswick County, they are our firm.
Yes.
So it's not all of Keller Williams in the whole world. It's just it's Keller Williams Innovate. So anyone that's a part of our umbrella is, would be considered a dual agent. KBT, for example.
Yes.
Would be considered a dual agent.
Someone told me they're not. They have separate licenses.
Oh, I don't agree with that.
Okay.
I don't agree with that,
Well, I
because
live by what you said.
you're better off assuming you are than get into this hat like this.
I have a question. So let's say you have a listing agreement in place and they say that they only allow designated, but you have an unrepresented buyer who that wants to put an offer in and doesn't have an agent. You tell your clients, hey, someone said they want to put an offer 30, and they change their mind and they're like, okay, well, we're okay with you doing that. How would you do that?
Okay, two things. I'm glad you brought that up. Because working with an unrepresented buyer does not make you a buyer's agent or a dual agent.
You're
So,
just simply
you're
right.
simply doing the paperwork.
paperwork.
They're telling you what to put on the piece of paper and you're doing it.
And that's always confused me when I see it like in the MLS that people are on both sides. I'm like, for sure, their client will be like, sure, you know, like it's hard enough to get it a listing better yet.
And I would recommend you act as a buyer, not unrepresented buyer's
Right.
agent. In that kind of situation.
You can still tell them like, hey, this is like, you do due diligence money, you do earnest money, you just don't say, hey, you should do 5,000 for
That's
this.
exactly right. Explain the process, explain what they're signing. But you don't tell them what amounts to put in the boxes. Because it's in the seller's best interest that you help that buyer with you can refer them to a lender. That's not a problem, right? Because the lender you refer them to will more likely be a better lender than someone they might pull out off the internet.
So in an unrepresented buyer situation, again, Do you have to go through professional services with them at all?
No, all you need is a working with real estate agents brochure, and you check that one box and they sign it.
Perfect, thank you.
Any other questions about dual agency? I know that's kind of a quick one. Yes, ma'am.
So if you call the listing agent and ask them questions on it, and they say, bring us an offer, the seller's very motivated, and it's a dual agency, I think, can you tell your client, like, hey, it's a very motivated seller, bring an offer?
So,
But that's like weird.
They're not supposed to tell you.
so if they got their seller's permission to tell you that, you can tell the buyer. So they should not be telling you that if they don't have their seller's permission. And I think that's where a lot of times we forget about that. There's so many instances where, and we're gonna talk about multiple offers in a minute, but it's up to the seller as to whether they want to allow you to tell any other agent, whether it's a dual agent or an agent outside the firm, anything. So when they tell you something, yeah, I'm really motivated, say, is that something I can share with agents of buyers? And if they say yes, then yes, you can share it. Okay? I know a lot of times we get a lot more information than we need.
That's right.
If you are a buyer's agent alone, you share everything you learn from that agent with that buyer. Okay? But if you're in dual agency,
Yeah.
strictly dual agency, you can't. Unless you have that permission. Okay? What else?
So let me just so we're clear,
Okay,
so on our team, right? If on the listing agreement, dual agency, the designated agency is what's initialed by the client, right? And let's say Amy has the listing, I'm on the team, I have a buyer that's interested in this listing, can I bring her an offer?
no,
Okay,
you'd have to refer it out.
okay.
You can refer it out to someone that's not on the team.
That can't be designated to.
No, not on the same team, not on the same team.
So we need to make sure ours, that they
Correct.
don't do that.
It's just always dual agency.
Or talk to them about it.
Explain it to them. Yeah. and let
So if it
them
would have been
make
dual
that
agency,
choice.
everything would have been fine.
If there was dual agency, you could do it, but you would still be.
It's that designated
It's the
agency.
designated agency because you're acting like you work for total different firms, and if you're on the same team, you'll never be able to do that. Because she might share with her team, oh, this seller, you know.
I got
wants
this divorced
or wants
woman who's
that.
selling her
Yeah,
house.
That's right, and you might learn some
Oh, that's that
personal
property.
information about that seller that, in designated agency, you would want to share.
But then regardless, once you're dual, you can't advise your client.
Correct.
But it's a little bit, legally, we can be on the same team and bring offers and just be mindful of what we divulge.
That is correct. Okay? So
could always change it.
sometimes it's better to have an unrepresented buyer. Because then you're still going through the motions with them, you're helping them get financing, you can show them comps if they ask you because it's public record. But you cannot give them advice on what to offer. But you're also not their agent, so they can't hold you accountable to doing that. But they need to understand that.
And you're not getting paid.
Yes, you are. So many people don't check the box to pay a sub-agent of the seller.
I'm one of those,
Okay, guess what that means?
that she wouldn't be able to be
That
paid.
she wouldn't be paid.
And I do that, I think we've had this conversation because it's a liability to my seller to allow another agent that knows nothing about my seller to do a sub-agency of my seller and misrepresent for a buyer that they're not representing.
Could be. But you are the listing agent, so you are there to protect them. So you are there to protect them.
Yeah.
But if you don't have a signed buyer agency agreement with a buyer, you are acting as a sub-agent of the seller. So you're representing somebody.
Yeah, but if you're doing an open house for somebody else and they want to put in an offer and it's someone else's listing, you can have them just fill out the agreement right there.
Oh, yeah.
If they check dual agency,
Right, but if they don't have like sub-agent commission, then you would have to do that to get paid and have them sign with you.
you would have to get a buyer agency agreement signed, yes.
So your question should be to the person that you're getting the open house for, like, what's that? The buyer.
Well, you could look it up on the
I mean, that
MLS.
listing agreement looks like.
Just
Yeah.
bring, just bring.
Well, and you can look in
lawyers
the
and-
MLS.
Chats.
Well, if people were doing it incorrectly, then would they be?
Yeah, we always.
I put it in there, I did.
That's why we-
I always offer a sub-agent. Yes.
So if you, instead of what we were just talking about, if you say, well, I want them to have representation, and I'm gonna refer it to Stephanie, because she's a new agent, I like her, you'll like her. So can I
Can you
get
get
a
a referral
referral?
fee? Yes,
Okay, good,
yes,
because I did that in December.
yes.
Well, I was like, ooh, yeah. Well, and I honestly, I think I met a buyer that I really liked, but I had a seller that was very quirky and a very good friend of mine, and I knew he was gonna be a pain in the ass. And she made a verbal offer and he goes, no, and then we made an offer on something else, whatever, long story short, she went back to him. And I said, I don't want to be a dual agent, so I'm gonna give it to Layla. So I think it's better to give, you know, some of the newer agents or somebody that you like or whatever, a referral and do it that way, because it just takes you out of the equation. It worked out beautifully, and this woman said, I hate real estate agents, and I literally am gonna tell everybody I know that both of you were fantastic, because she was like, I've been screwed over so many times, and so it was just, it felt good. I mean, it is.
Yeah.
Yeah, I had a buyer that was purchasing new construction, and the agent, that's all he does is helps these builders. And you know what he called my commission? That dirty realtor commission. So that's the reputation we have with builders.
Yeah.
And others.
Yeah.
So there's only one way to fix it.
I want so many
Step
to
at a
earn
time.
that reputation.
Yeah. Yeah, and we all know that. Okay, other questions about dual agency?
I don't know, I felt like I didn't have any questions, and now after all this, I'm confused. I thought I knew what it was, and
Clear as
now I
mud, right?
don't know.
So the bottom line is you are representing, if you are that person's agent, you are acting on their behalf,
Yeah,
right?
yes.
If
That's the
you are
main
a-
part that I got.
If you are a dual agent, you are a facilitator. You are not acting on 100% their full best interest. But if you don't, then nobody at Keller Williams can show that property and sell it.
So when you send out in general a listing agreement, do you check dual, I mean, do you put in whatever, not loop or DocuSign, dual and designated?
No, it's one or the other. On the agreement.
So you can only have them sign, because I was like, I feel like I feel like I always have them sign dual.
Okay,
I think
Like,
I
that's
have
what I
somebody, I think I
said.
have somebody sign and I check all the time.
I
was just
oh, that's why we're having this discussion, because I know that people are not sure about that.
So I understand designated, because I know exactly what
did
it is, but I'm saying that I assume like seller, please, I'm saying as a listing agent, seller, sign dual because you want Keller Williams to do this. If you're uncomfortable with me being that dual agent, if I bring you a buyer, then I change the agreement and I have a conversation with them, or they say, yes, we'll do this.
Or you refer it out.
Or I refer it out, and then if not, I do designated if they want it.
And they can initial there
Yes,
and scratch through the other and initial the change.
okay, I just wanna make sure I was doing that right, because I assume dual, unless they say
A
that.
lot of people do.
Yeah.
Okay, all right. If you have any questions about this on a one-on-one basis and you're ashamed or embarrassed to bring it up here, please come see me afterwards or call me sometime. If you have a situation where, oh, you know, I answered the phone or I call you right
I
back.
called you about this. I was like, Jody, I'm confused.
Yes.
I'm so lunch. I got you for lunch.
He has two buyers that wanna put in an offer on the same property.
That's okay.
And I advised him a certain way, but I'm doing
So in the contract, it says that we may have other buyers or other clients that we are working with that want to make offers on this same property. You encourage them to do what you want them to do, but you don't refer back to the other offer that you've written.
So Ed told me, I had that situation too, Ed Reinfeller said that he would recommend have the other, because I said I know these buyers, they're friends of mine's kids, and it's my listing, and then I got another person out of town that wanted to make an offer on my listing, we had 17 offers. So he said, I would recommend you do unrepresented for this person.
Yeah, but you were also the listing agent.
Right. Is that, you didn't say that?
No, just
I said-
Just two buyers.
that went off on the same
Oh,
property.
I thought you said,
Yeah.
yeah. Cause I was like, oh, I've never been like a
But you
double.
can't give them any advice that way, right?
If you have two buyers,
No.
oh yeah, for her, it depends on how her listing agreements.
Well, the third person went away. It was, I was like, oh my God, I've never had this. What do I do now? Yeah.
As long as you're fair and
I
honest with
told
people,
her-
I think
Yeah.
they appreciate that more than anything. And that's what I will tell you, is if it doesn't feel right in your gut, it probably isn't.
I just go with the one who I like better and say,
Okay.
can I,
Refer you out to someone
yeah,
else.
somebody else. who
Yep.
Because you know you're gonna.
It might
do
be a
that
one-time
anyway.
thing, right, where
Yeah.
they came along and and the other person you might have been working with for 6 months.
Yeah.
That's what I was talking about, just disclose it, we don't have a choice. Let them
That's
decide
right.
what they wanna do.
That's right.
Just make sure you.
But the offer to purchase does say, and the buyer agency agreement, I believe, says, we may have other clients that may be interested in the same property.
So it's not material, I don't have to go
No.
to buyer A and tell them that I've submitted an offer on buyer B's behalf.
Nope.
It's only if one of them wins the
Just
offer.
making
and they
sure.
Because
say,
that's
I've
not
done that
material
when I
fact.
won for one of the two.
That's not
But
material fact.
They're two different conversations. two
But
different
I would-
Material fact is something that has to do with the house itself, the condition of the home.
He's like, require it to tell us.
Well, you would because
Yeah, it seems kind of.
if you win it, I mean, I know you're not required, but if you win it, you're gonna look bad if you don't tell them, don't you think?
That's what that's what it's
How would they know?
Maybe sharing.
Because they always find out somehow.
Because another agent will say, well, Amy Brown got it in the contract. But
I think you just have that conversation up front, that they sign.
I told people in my.
Like,
Yes.
I go over it and say, just so you know, I'm working with other buyers and I've made an offer.
In this market especially, right?
Yeah.
You got one that shows up for 160 grand, boom, I went yesterday and showed this place, it was like a yard sale, man. In and out, in and out. I left the key in the doorknob, it was probably left there at 2 o'clock and I was there at 6 o'clock, you know? And that's just how the market is. So it's not unusual. It's awful. If you're working with buyer, it's awful if you're working with the seller.
I bought my first house in Elvis, like in 2014 for $133,000.
Oh my
And now they're
God.
250.
Now they're taking D, so I hate myself every single day.
There's one on
But-
White Road for
I thought I was gonna get it in, but I turned it $20,000 off.
Okay, the next thing I want to talk about is multiple offers. And I appreciate your calling, because I rather you call me than not, okay? But I feel like it's a good conversation we should have as a group. And I'm leaning on those experienced agents in the room who have had situations where, oh my God, this is what we did. I don't know if it was right or not, or I called you and that's what we did. So multiple offers, first and foremost, you don't have to disclose that you have multiple offers. It's up to your seller. So if you received 15 offers in one day, you ask your seller, do you want to ask for highest and best? If they say, no, I want to take that one, then you take that one. And you tell all the rest of them, thank you, my seller has selected a different offer. And they go, why didn't you ask for highest and best, right? Because my seller didn't want to. And that's all you have to say. So that, I think, is a big misconception as well. We worry about what other agents are gonna think of us if we don't ask for that. But it's not your decision, it's the seller's decision. Because you can run the risk, now in this market, maybe not as much because it's so common, but a year or two ago, you could run the risk that the other buyers would say, I don't even want to compete. And then you don't have anyone, you don't have any offers, so then what? So I think you need to explain that to your seller when you say, do you want to ask for highest and best? Here are the pros, here are the cons, and they make that decision. So the pros are, you might get more money, you might get more offers. The cons are, people might walk away and not want to compete. And then we could end up with nothing. Okay, so that's number one. It has to be your seller's choice. And I think so often agents, none of us, of course, but other agents in our world, our industry, will just tell the seller, well, this is how it has to be, and it doesn't. It's up to them. Okay. So there's a form, I didn't print it out, but there is a form, it's an offer worksheet that's in Zillow, in Zip Forms or whatever. That's a good tool if you start getting multiple offers on a property. It's kind of an overview of each one. I know some teams have sheets that they fill out that say this is an overview of the property. Obviously, price is not always the best motivation, right? Terms are so much more important. When I get someone that calls me and says, my buyer wants to make an offer of 200 and they'll pay cash. Okay, put it in writing. Well, we want to make sure that we're even in the ballpark.
No.
Sorry.
And then you get it. and then-
You have to disclose any and all offers that you've received. But you want that offer in writing because there's so many other things that could be in there that you don't know about. Due diligence date, due diligence fee, earnest money fee, earnest money deposit, earnest money date, whether they want a warranty or not, whether they want any personal property or not, whether there are solar panels on the roof, and you didn't mention that they had to assume the loan, even though it was all in MLS, you didn't have it in the contract. So that's another subject I'll touch on, obviously, that's a recent one. So you'll want to make sure that your seller supports receiving multiple offers and asking for highest and best. You'll want to document all of the terms of each contract and let them make the choice. Now, you might right off the bat, I had a listing over off of Rose Avenue, we had like 15 offers in 6 hours or something. There were some that weren't even in the ballpark. So I sent them to her, but I said, hey, if it's not even in the ballpark, just put it aside. Don't stress yourself out trying to review every little thing about it, because the price was just not even close to the others. So we picked the top 3, and then we analyzed each one, and then picked the one that was best suited for her needs.
Can you tell me a little bit about escalation clauses? I had heard from it.
But they're doing them.
Yeah. In North Carolina, they really frown on them because the real estate commission says you are not allowed to disclose any terms of any offer until it closes. Okay, so if I have an escalation clause in there that says I'll pay $5,000 more than your highest offer, then if I go to you and I say, okay, you got to pay 205, then I've already told you that the highest offer I had was 200. So I have broken the law, the real estate law, by telling you what my other highest offer was.
Are you getting
People are doing them.
I know.
Are you getting escalation clause that are mixed up with
Appraisal.
appraisal gap?
No,
No.
they're two different things.
I
No,
had,
she's talking about.
no, I had a neighbor tell me that she had her house listed in Mayfair, and not with me, but that she got an offer that, I know, she got an offer that no matter what, it was to go $1,000 above anybody else's offering price, and she took it.
Oh, wow.
My first listing, I got that and I told Jody, I was like, I don't know what this is. And you were like, I just tell the agent. I couldn't.
Yeah. And,
So that agent was doing something illegal that responded to and accepted that.
yeah. And your neighbor has no idea.
No.
But why do we have a form? I mean, that's what, like, there's the form.
Somebody created it. We didn't.
It's not a realtor form?
It's not a realtor form and it's not a KW form.
You mean the one that's in,
I thought there was one.
no, that was for the preschool.
Yeah.
Oh, okay.
I've just been hearing of a lot of.
I thought, no, I didn't, I haven't received one, but somebody called me and said, what do you think about this? And I said, it's illegal.
So, yeah, so escalation clauses are a big no-no, and that's why. Because the real estate commission says in North Carolina, you cannot disclose any terms of any offers without the buyer's permission. Okay? So if that buyer made the offer for 200 and you went and said, oh, and then another offer came in with a $5,000 escalation clause and you said, oh, okay, well, we'll take 205. Then you just broken the rule by telling what the other buyer's offer was without their permission.
What if that buyer is then told, and then what if you tell the buyer, somebody's going to offer $5,000 over this price? It could go on and on and on, right? If they agree to that.
Yeah, that's like bidding for a property at a courthouse, right?
Yeah.
That's another topic. We won't discuss today.
We put our offer in and then I'll put it in the body of the email and call the listing and say, I know you can't disclose other offers, but my buyer would like the opportunity to accept the counter higher and better than what you have on the table to see if they would be willing to accept that. And I did win in that situation.
And that's
Because
allowed?
the seller came back and said, I
Yeah,
can't disclose
she
other
has-
offers, but we would like to counter back with you at this sales price, this due diligence, this price, like my buyer said, absolutely, let's do it, and then we won.
Okay.
Well, that's a good strategy.
So for from a listing agent perspective, it's like, well, why didn't you make that offer to begin with?
Yeah, but you just
You
don't know
asked for
how-
highest and best, and that was supposed to be your highest and best, but it wasn't. But I understand what you're saying.
It
It's
is
not
also-
written in the rules.
Let's say you
It's
give
just-
I
it-
read it whenever that happens.
So I want one option. I want somebody to send an offer into the body that said, we will pay up this so long as an appraisal. I mean, is it like put in a hat or what that's? I don't
But I would,
So I think that's key is you can put anything you want in an email. That's why they outlawed these letters, you know, the love letters. But it's because it was breaking fair housing laws. It wasn't.
But you can still put it in an email?
You can put some things in an email. Yeah, because it's not from the buyer.
you can say,
You can
like,
say, you
they're so
know-
excited to move to this neighborhood, and they already know people in this neighborhood.
Yeah, and they've been working, trying to find something for 6 months and they're a nurse in the neighbor, in the area and blah, blah, blah.
They just had to
You can't get like that.
Just don't put pictures of them with their dog and all that other kind of stuff, because that's.
What about that signature on your?
Because if you have a picture of them in, you know, with their dog, they now know the race. If it's a husband and wife, they know the sexual orientation or not. But anyway, there are a lot of suggested things that come along with putting a picture or certain information in a letter. So just be very mindful of fair housing laws when you put anything in an email.
I think one thing we should talk about is when you are the listing agent, you do have multiple offers, but you have not asked whether you have gotten permission or not, what you should say. Because even saying, have you gotten any offers, just in general, you say, no, we still haven't gotten permission from your seller to say
Right.
that.
And no is just as bad as
And
saying yes. That's right.
Exactly.
And what you could say is, I'm not at liberty to disclose that.
I haven't been given permission to tell you either way.
So I'll get that, right? Do you have any offers yet? And it's so easy just to say, yeah, I've got 2
Right.
or whatever, but again, you can have your seller give you permission to tell them you have offers, but you may not ask for highest and best. They may say, I don't want to ask for highest and best. So you have to get their permission to say anything about it, because it is technically not a material fact.
It's just verbal permission, right? We don't have to
That's
sign
right.
it. You probably said this again, what you actually used about.
The email.
So whenever you're a buyer's agent, you submit an offer to the listing agent, you're just typing into the email. While we understand you can't disclose any other terms of the buyer's offers that are on the table, my buyer would like to welcome the opportunity to accept a counter higher and better than what you currently have on the table.
Thank you.
Okay. Anything else? I know we're over.
Before it's.
And we do have pizza out there if anyone's still hungry. Please, somebody eat it.
And also be careful you don't negotiate two at the same time. You can get in big trouble with that.
Yeah, remember, you only have one house to sell. So you extend a counter over here, you have to wait on their response before you extend the same counter over here. And when you ask for highest and best, it doesn't mean you have to take any of those. The seller, I'm sorry. The seller can still counter on a highest and best offer. Maybe it's terms, maybe it's, hey, I'll take your offer if you shorten your due diligence by 4 days or whatever. Okay, but remember, the seller is your client and you have to do what the seller asks you to do. So you need their permission.
I had a really difficult seller, you know this, and there's actually a form where it specifically says, this is not a counter, but
Yeah,
if you would consider. these,
response to
we
buyer's
can-"
offer.
Yeah, where it's
Yeah.
not a counter, so you can send it out to different people.
That's true.
'Cause
You could.
you're-
The seller will consider this in an offer.
Yeah,
And then they would change their offer and send it in, and then your seller would have the opportunity to accept it and sign it.
because then it's not a counter, so you can do whichever one you want.
There's also this whole thing about due diligence, right? So the due diligence is supposed to come with the offer. But so often you have out of town buyers. And how are they gonna get you the money? You need to figure that out before you put the first offer in. Okay, and then you need to disclose that to your listing agent. My buyer is out of town, they will overnight the check today, I will have it in my office tomorrow. And if it doesn't come,
I want to add to that because I just learned that this verbiage was in the contract that the buyer has 24 hours to deliver the due diligence on the execution. So I used to hold listings hostage, right? Until we got the due diligence. I know we're not supposed to, but it was for the purpose of not going pending, only to come back on the market. But so now when we accept an offer and I submit the buyer's side a fully executed contract, I also put in writing, let the service notice as per the terms of the contract that your buyer has 24 hours to deliver the due diligence, or the seller may exercise their right to terminate the contract. So it allows the buyer to have a comfortable feeling that they have an executed contract. Because sometimes, it's like, how
I'm
am
not
I
giving you any money
gonna
until-
wire you $5,000?
and it's like,
And I don't
okay,
even.
you hand me the check, I'll hand you the
Contract,
contract, right?
And it's.
And some agents were doing that.
And I was until I realized
Yeah.
that was written into the
Yeah.
contract itself, up until most recently.
So the last paragraph, I think it's at the bottom of that page,
Page 1 or top of page 2.
or top of page 2, depending on how you're.
So now
Stuff
that procures, that requires, and that's what. a
But you
buyer-
have to give the buyer written notice.
That email
and that's-
serves
that's
as, and I worded
written
like that,
notice.
that this serve as written notice that if
Yeah.
the DD isn't delivered within 24 hours as per the terms of the offer to purchase and contract, seller may exercise their right to terminate this offer. It puts buyer under.
Man, the other week I had a buyer's agent chasing a UPS truck up and down the highway because they were trying to deliver to their office after 5 o'clock and no one was there. He went all the way to the UPS down on, and lives in Hampstead, went all the way to UPS on 23rd Street. They go, the truck driver's still out. So he went all the way back to Hampstead and chased that truck down until he could find the buyer.
I've been sharing that, I'm a transplant, I've had stuff overnight, doesn't always come overnight.
No, you're right. And UPS, the USPS.
No, I
is
haven't.
awesome.
Yeah, wait, guys, I got a tracking slip.
It still doesn't.
It's still not
I know, but
living,
it might
I know what to tell you.
suffice.
Well, yeah, they can do, they're
That's
not
good
happy.
pay.
So they're
That's
not.
not a
it's
contract.
But
That's
it's
good.
not that electronic.
So I was gonna say, I'm seeing more and more wiring and
Yes.
electronic transferring because of that.
Can you do that?
UPS, they did it overnight, that one was like $80.
Yeah.
That was ridiculous. Yeah, the guy was tracing the damn truck up and down the road.
Well, not
So-
the wire, you wire to the sellers.
It's a good one.
And then for, or I'm saying for the.
So it's not really an installation clause, but a lot of our contracts with, builders give them the right to terminate at any point.
And get the money back.
You gotta read those new the contracts that the builders have of their own.
You're
Okay,
crazy.
they have the right to terminate for any reason or no reason and give the money back.
And up the price.
They can also up the price. So I had a buyer, 2 Fridays ago, roughly. We've been under contract since December. We went that afternoon, spent all afternoon picking out, faucets and all light fixtures and all that crap.
Good
Went to
shot.
meet with the builder that evening and he goes, I can't build this house for you for that price. I have to raise it $60,000 today. And that was on a $330,000 house. It wasn't even $1 million house. And he said, I just can't. I'm better off telling you now and giving you all your money back. I'm gonna give you $500 for your trouble, pay for your appraisal, do all that, but I can't build this house for you. And it was heartbreaking for a few minutes. Till the agent said, well, I had a guy that built the same house a year ago and he says he wants to sell it. And we went over
There you
that.
go.
So that's the good news. But it could have easily happened where they had nothing and you were back to the drawing board. So watch your new construction contracts. Because, and rightfully so, the builders don't know what material costs are gonna be. And I have to take my hat off to this particular builder because he really was being very honest.
Well, some builders have stopped building, like H&H,
Yeah.
they're like.
They got sold out, bought out
Oh, really?
by somebody else.
I
Yeah,
had
by
a
Again?
larger-
contract very.
larger builders.
Oh,
3-4 months ago.
maybe that's where it was.
H&H is bought out.
Yeah, it did.
Yeah.
Well, the lots,
Thank you, Jen.
okay, thank you all. Kim and I have a client that it's been 2 years, you know, but it's almost there. It's so close. But they waited on windows forever. Windows and doors seem to be.
For windows.
Yeah, and they're still waiting on the garage door for the outs, you know, the big garage door.
Yeah.
But at least they got those, well, they had to get a different kind of light window for the door for the.
Oh, to be able to close.
So, yeah.
I just
So,
remember her
anyway,
windows.
just watch your new construction contracts. And incur, hey, for $100, sit them down with a lawyer if they want a
That's what I
lawyer.
do.
You know, we're not lawyers, remember that. We're hired, and when they ask you to do something, you done it. It says right there in the contract, whether it's a buyer agency agreement or an offer of purchase. You're hiring me to be your realtor, not your surveyor, your engineer, your electrician. your contractor.
I make a big deal about that section too. It's like, and just so you know.
Yep, exactly.
Great Rolodex.
Let's revisit.
Yeah. Hey, I have a, do you have like 3 minutes?